Hey everyone, good morning. Hope everybody's having a good weekend here. I'm glad it's Saturday morning. It was a little bit of a slow week this last week, and I wanted to come on here and talk to you guys about one thing primarily is what to do when there's not a lot of opportunity, when your strategies aren't coming up as often as they were before, which is something that I've struggled with in the past. And something that normally goes on this time of the year. Home Depot reported earnings on Tuesday, I believe it was, and I use that as a gauge to judge when earnings season starts to tail off. And the reason why that's really important to me is because these last couple of years, my number one strategy has been professional gaps. And pro gaps is something that we teach here at T3, something that we really focus on quite heavily in the black room. So when Home Depot reports earnings and earnings season starts to tail off, there just aren't as many professional gaps. Right? So 2-3 weeks ago, we had 200-300 companies reporting earnings, and there were hundreds of gaps to go through in the morning. And now that earnings season is ending, there just aren't as many pro gaps. And what that leads to is, well, that, and also on Friday specifically, we had a really narrow range in the cues here. Right? There was some up and down movement, but overall we were pretty sideways in the overall market. So what does all this add up to? It's Friday. It's normally a little bit slower on Friday, especially towards the end of the day. We didn't have a big trend day like we saw recently, where we got these wide range bars, and we also don't have a lot of gaps in general, right? So what does all this lead to for someone who primarily trades professional gaps? Well, it leads to a slow day, right? And that's what I experienced this last week, is that there just wasn't as much opportunity. Now, last week was still a good week for me. Yesterday was still a good day. We'll talk about the 2 trades that I had. So there's still money to be made when there's slow times. But what I want to talk about was how or why it's so critical to stay disciplined when the opportunity of trades aren't as prolific when earnings season ends. Right, and so what this yields to is that my edge is smaller, and when I have a smaller edge, then it's even more apparent for me to stay disciplined. Right? Okay, so those are the 2 things that I want to cover. We'll talk about how the opportunity of trades affects our edge, and how to adjust mentally, and then I'll also towards the end here I'll just cover the 2 trades that I took. So. Okay, so real quick here, I'm going to try to keep this pretty short because there's a lot in this, and we're probably just going to touch the surface, but I use 5 variables to, hopefully let me type into the watch list here, but I use 5 variables to dictate my edge. Right? One is batting average, so how often I'm right versus how often I'm wrong, which when I started trading was the most important thing to me, because it makes you feel good if you're right more than you're wrong. Right, if you have I should say right more than you're wrong, if you have a winning trade versus a losing trade. Right, but it's probably, come to find out later, it's probably one of the least important things. So batting average, R to R, so risk versus reward. How much are you making on your winning trades versus how much you're making on your losing trades. Cost of trading, so how much does it cost to place a trade. The size that you're taking, right? So your position size. So I right now I risk $200 per trade. So when I enter into a position and the stock moves against me, when I get out, how much am I going to lose? And for me, it's the same time. It's the same amount each time, which right now for day trades is $200. So if I enter into a position, it moves against me, I'm going to lose $200. Right? So it kind of keeps a common denominator for all my trades. So the size of the position, and then the last thing is how often does my edge present itself? right? Which is something that I would say probably out of all of these is something that I have least control over. Right, so batting average, I can fine-tune my entry points, so I can increase my batting average. R to R, I can adjust my management cost. You can, which doesn't have a huge implication with how much it costs to trade these days, but you can, shop around for costs. The size of your position, all of these things, and my account size dictate the size of my position personally, but this you can control of how much you risk. But how often the trade presents itself is we do have some control on that, but for the most part it's what the market's doing, right? What opportunities the market is yielding me, because I can't there's very few traders out there that are incredibly busy every single day, right? We do have lulls. And for me, when earnings season ends is when lulls come into play for me, right? So what's really important is that I adjust my mindset when trading opportunities start to disappear, because my edge is shrinking. And I didn't realize a lot of this stuff once I started trading. I mean, I kind of understood the concepts of these variables, but when there's not a lot of opportunity, my edge is literally shrinking. And so what I need to focus on is the one that I'm working with a smaller edge, and so it's even more critical for me to stay disciplined. It's even more critical for me to act in the confines of what my edge is. Because any small mistake that I make is going to have a lot larger consequences than 3 weeks ago, when I was very aggressive, when there was a lot of opportunity, there was a lot of stuff to pick from, right? And I was in the mindset of trading. I'm going to take a lot of trades. I'm going to average 5, 6, 7 trades a day, and I'm ready to go. And that, for someone like a day trader like me, that's where I thrive, right? I like trading. When I wake up in the morning and I come and approach the market, my goal is to make money. Right, and before, when I started trading, my goal was to trade. And so if your goal is to trade, when there's a slow time, there's a lot of times where you may meet your goal of trading, but you may not necessarily make money. Right, and so I wanted to jump on here to really kind of, if this is you, and I'm sure there has to be people out there that this is a busy time for them, but if you're trading professional gaps, if the opportunity is starting to slow down, I just wanted to encourage you guys, and I also encourage myself, that it's okay not to trade a lot. That you could still make money in slow times, it just may not be as quickly. Right? Because if you overtrade, you're going to have a boom and bust equity curve. Right? So if I let's see if I can just draw this real quick. So my equity curve when I started trading used to look like this. Right? Here's earnings season, and then here's after earnings season. Right? Actually, it would look more like this. Right? And then here's after earnings season. And what I didn't realize was that my edge was diminishing. And I need to act accordingly when my edge is getting smaller. Now, it's not getting smaller by a lot, but it is starting to diminish, and so my mindset needs to reflect that. Because if I have all of the aggression from before, when my equity curve is like this, and then all of a sudden the oftenness of trades starts to disappear, then I need to be aware that if I trade perfectly, my equity curve may still be like this. If I trade perfectly. Right? The slope won't be as steep if I trade perfectly. And that's okay. That happens when you're a trader, a discretionary trader, or I guess even if you're a systems trader, but anytime you're dealing with game of chance theory, that happens. It's not going to be a straight line. Right? And so this last week, what is very helpful to me is I looked back and I said, okay, when do I start to give money back? right? When do I start to trade poorly? And what I noticed was when Home Depot reports earnings, that's when it happens. The week that Home Depot reports earnings, I'm still trading aggressively. I'm still trading like it was 3 weeks ago. I'm still trading like there's 300 gaps that I'm looking through. Right? And so that's what I use personally. That's my gauge. And then my focus day to day is, let's only go after perfect stuff. Let's only go after perfect stuff. Let's stay very focused, find stuff on their own page. And let's also, what I do is I continue to tell myself that it's okay not to be trading right now. That's okay. Right? And that's primarily what helped me get through dealing with when opportunity decreases in the market. All right, so I just wanted to bring up these variables that make up my edge, and how I would say that the one way to get around if there's not a lot of opportunity is to do research and coming up with new strategies. That's what I do. But for the most part, I can only act in the confines of what the market gives me. And sometimes it's difficult. Right? Okay, so hopefully that's helpful to you guys. I know this was it was always very difficult for me to scale back my aggression, and luckily I had the moderators in the black room that have gone before me and are very good at doing this, and they would talk about this, that earnings season's ending and I need to take it easy and stuff, which is for someone who likes trading, who feels that they're born to do this, taking it easy doesn't come naturally. And so, luckily there's a whole group of people in the room that have gone before me, and luckily now, through a lot of time and hard work, I consider myself in that category where I'm a lot better at scaling back my aggression and dealing with these slow times when opportunities just don't present themselves. Okay, so one of the big benefits, I think, of being in a trading room. Okay, so these are the two trades that I had. Right, I had AMAT yesterday at the open, and I had AMAT, and I had COHR. Right, these are the two trades. AMAT only yielded about an R, about $200, and COHR was about an R and a half, right, $300. So those were the two trades. And even yesterday, yesterday I only had two trades too. SNDX, which I lost $20 on, and the NTES, which I think was like a 2R trade, something like that. And then on Wednesday, I think I had 3 trades, and Tuesday I had 3 trades as well. So it's definitely Tuesday I think I had 4 trades actually. Okay, so let's just we'll talk about the trades on Friday. The first one was AMAT. Here's the post in the room. 934, AMAT short, low of the day, stop 49.85. Here's the targets that I put out. Target 2 is 2 to be determined. Just happened pretty quickly. Things move fast. 4 minutes into the open. AMAT, the trail wants to hit target here, and then I'll show you where we trailed the back half. Then we ended up trailing a quarter, and then the runner position ended up stopping out. Break even, didn't make any money. Okay, so those were the calls. So that's just from the announcement box that's in the room here. Okay, so let's go to the 1 minute. Okay, let's start from the top-down approach. Professional gap down. Right, so everybody that was in this stock here, we were underwater. This is a very weak stock. Weekly chart is in is pulling in here, right? So like trading inside this red bar, and it looks like we may be starting to top out here on the weekly chart and possibly rolling over here. Too early to tell, but because of the pro gap down on the daily chart confirming the daily sell setup, I have a short bias on this. Now what really helped was in the morning we got a wide range bar to the downside that took out this support area, the bottom of this wide range bar here. Right, so let me expand this out, and the entry was off the 1 minute chart here, and it was a I should probably go to the 2 minute because there's really a 2 minute 1, 2, 3 lower. Okay, so we got this wide range bar on volume, which I mentioned took out this support area. Wide range bar on volume. The short was the under the low of the day here, stop above this doji bar, and on this drop, once we broke 49, that was the target. Now I got a little bit worse of a fill here than what I put into the room because things were happening quickly, and so I mentioned in the chat box to trail some, and so I got a little bit of a worse fill here because I didn't get my stop order in time, but still ended up working out to be a pretty good trade. Okay, so we took some on the initial drop into this support area here. That was half the position, and then we started to grind lower here, and we started to lose some momentum here, and so we ended up taking another quarter. The next target was 48.52. We came close to that. We just weren't able to break this 48.55 area, so we ended up taking another quarter here, and then the runner position we trailed on the 5-minute chart here. Right, so short, first exit for half, another exit for a quarter, and then the runner position, I managed 5-minute significant pivots, and then once we established this 5-minute uptrend, we trailed right over this green bar, which coincidentally was a 2-minute significant pivot back here. So we had moved our stop to this 2-minute significant pivot that ended up holding here. We talked about, I was on the mic, we talked about adding here, but it wasn't official or anything, and I actually tried to, but I didn't get filled. And it just didn't follow through, right? And so where we got out was the location where I felt we were wrong. You know, if this moved against us and it would continue higher, that, you know, I just felt like that my strategy and my management specifically says that if we break this pivot here, then we're likely to take out the original stop and knock them down and make new lows, right? So that was the AMAT trade. It's really nice on the 2-minute here, right here, right? 1, 2, 3. Right, so really nice pattern. This was one of the better pro gap downs that we had on Friday. So just going after the really nice stuff, and that's all I did in the morning. And then we had the COHR, which was a 15-minute sell setup. Yeah, so that happened right at the open, and I didn't do anything until later in the day here. Okay, so COHR, we had a small gap down. We broke through the support. We came into this area of support where we got a bounce from, rallied here, and then did a sell setup. Right, so this is a weak stock. I believe this is a climactic monthly, so weekly is really weak. Maybe starting to slow down here a little bit. Monthly chart, really nice climactic monthly. Right, this is something we teach in the black room here. New high, inside bar, and then reversed. Right, so climactic monthly. Have a bearish bias on this. Like the small gap down here. I think the really compelling thing was this had a really nice 60-minute chart. Right, so we broke through this area of support, wide range bar, came into the area that we started this move from, rallied, and then did a sell setup. Right, so 60-minute sell setup, 15-minute sell setup, and a weak bias given the daily chart here, small gap down. Okay, so I was interested in this because we had this topping tail here. Right, so we have a convicted move, and then we have a retracement. Now this retracement started with wide range bars. We started to get these tails here, right, where sellers are starting to come in, and the conviction between the buyers and sellers is starting to shift, right? A lot of conviction in the buyers here, and then it's starting to shift. We can see that in narrow body bars here, and also we see these topping tails to the upside. So where buyers are pushing this up, and then sellers are starting to come in here. Right, and then we get a tightening of the range here, which shows a little bit of indecision. We move up, we retest this prior tail, retest the declining 20 MA here, and immediately get reversed. Right, so let's jump down to the 5 minutes. So that's the 15-minute pattern, and then I go to the 5 minute and I look for where's the transition taking place on the 5 minute. 5 minute moving up here. This isn't a really nice, but we do kind of have this breakout inside bar. Stock pulls back, tries to move up here to trigger this buy setup, and fails. Right, so the entry is was under 169.25, I believe. I'll show you the post in a second. So failing on the 5 minute buy setup, which is triggering. So this is the transition, failing on the 5 minute buy setup here. So the 5 minute is transitioning into the downtrend, and the 15 minute is starting to roll over, giving us a 15-minute sell setup. Alright, so this was the actually I should leave this on a 5 minute chart here. This was the call that was posted, 128, 169.25 by 170.40. So can use this as a stop here. So pretty tight stop. The retest here. Moving average on the 15 minute was coming into price, so we used the lower high, and entry was right under this area of support that we came down here. Right, so we had this breakout failure, failed 5 minute buy setup, entry short. I got a little bit of slippage here. This was a little bit spready. We had a nice move lower here. The first target was really 167.25, but we got this move lower and we started to get a little bit of acceleration, and it was spready. So we were really close to a target one, so we ended up taking taking the first half in this initial drop here. It began to base sideways. We reduced our stop here to 168.50, and then the last half we covered 2 minutes before the close, COHR over the 1 minute bars high. Right, so we reduced our stop here, 168.50, once we started to roll over, because I trail 5 minute significant pivots here. So once we had a 5 minute significant pivot, we trailed this. I think it may have even moved the stop a little bit earlier as we were coming into the close, just before we broke down. And yeah, so once we fell into the close, we trailed over the 1 minute bars high right here. Right, so target 2 was low of the day. So we got pretty close. So this was pretty good. I undersized this a little bit. It yielded about an R&a-half. I think if you didn't get the slippage, and if you sized it correctly, I undersized it because of the spread. So it's probably a 2R trade, but in real life, real trading, it was about an R&a-half. Right. So those were the two things that I did. Wasn't a busy day. There's only 2 trades. I was in front of my computer most of the day. Just wasn't a lot of opportunity. But went after the things that I thought were really nice, right? Really pretty. Didn't take anything that was really aggressive. Both setups I thought were almost picture perfect. And that's what I stuck to. So it was a slow day, but it was a good day. And the reason why it ended up being a good day was because I kept my mindset in direct correlation with what my edge is at the given time. Right? So assessing the market environment, looking at the cues, seeing the cues are going sideways, so it's going to be tough to find things, market-related stocks that are trending nicely, and there wasn't a lot of professional gaps. So staying focused on what the market is giving me and where my edge is, because my edge is fluctuating, not a whole lot, but it is fluctuating, and trading in accordance to that. All right. And again, yesterday was a slow day too. There was NTES was the only trade that I had, which I believe was a short at the open. Yeah, NTS was a short at the open. The runner position on that also didn't follow through. Still ended up making 2 Rs, but pro gap down here, right? NTES. So anyway, just wanted to go over that with you guys. Hopefully this was helpful. I know that it can be a little bit trying sometimes, but if you stay disciplined, you can still make money. May not be as busy, may not be as exciting, may not be able to press the button as often as 3 weeks ago, but all in all, I need to make sure that I want to tell myself that when I wake up in the morning, my goal is not to trade, my goal is not to press the button. My goal is to I have an edge in the market and exploit that as often as possible. And sometimes it's just not that often, which is okay, and that happens. And I need to tailor my trading in accordance to what my edge is yielding me, what the market's yielding me at the time. All right, so just wanted to encourage you guys that there's still a lot of opportunity. There was a lot of other calls in the black room all week. There's a lot of good calls yesterday. So there's still a lot to do, but just a slow time for me. But you can still make money. So hopefully this was helpful. Just want to remind you guys, just stay in process. That's kind of what I live by in trading. That I'm still in process. I never really arrive somewhere, but just keep refining. All right, guys. I'm gonna jump off. Hopefully this was helpful, and I hope you guys have a great rest of your weekend. And I'll talk to you guys next week.